Why Indian market is crashing? There could be a variety of reasons why the Indian stock market is experiencing a decline. Some potential factors include economic concerns. India's economy has been affected by a combination of factors, including high inflation, a widening trade deficit, and a slowing growth rate. These factors can lead to investor uncertainty and a decrease in demand for Indian stocks. Political uncertainty. India has been facing a political turmoil. This can also impact the stock market as investors may be uncertain about the policies and actions that the government will take. Global factors. The Indian stock market is also affected by global market conditions. For example, if there is a recession or a financial crisis in other parts of the world, it can lead to a decrease in demand for stocks globally, and this includes India. Sectoral specific issues. The performance of individual sectors within the Indian stock market can also affect the overall market. For example, if the technology sector is underperforming, it can drag down the overall market. It's important to note that stock markets are inherently volatile and can fluctuate based on a variety of factors. It's not always easy to predict the market's movements, and in the short term, the market can be driven by emotions and speculation. Economic concerns can have a significant impact on the Indian stock market. Some specific economic factors that may be contributing to the current market decline include high inflation. High inflation can erode the purchasing power of consumers and businesses, leading to a decrease in demand for goods and services. This can negatively impact companies' profits and, in turn, their stock prices. Widening trade deficit. A widening trade deficit, which occurs when a country imports more goods and services than it exports, can be a sign of an imbalance in the economy. It can also lead to a decrease in demand for Indian stocks, as investors may be concerned about the country's ability to pay for its imports. Slowing growth rate. India's economic growth rate has been slowing down in recent quarters, which can lead to investor uncertainty and a decrease in demand for Indian stocks. Banking crisis. India has been facing a banking crisis. Many of the public sector banks are facing huge non-performing assets, and this has created a negative sentiment among investors and could be one of the reasons for the stock market decline. Labor market issues. The COVID pandemic has created huge labor market issues. The unemployment rate has increased, and this could be one of the reasons for the consumer sentiment being low, which in turn will affect the consumer spending and GDP. These economic factors can lead to a decrease in demand for Indian stocks and result in a decline in the stock market. It's important to note that stock markets are closely tied to the overall health of the economy, and when economic conditions are weak, it can lead to a decline in stock prices. Political uncertainty refers to the unpredictability or instability of political events or policies that can impact the economy and stock market. In India, political uncertainty can be caused by a variety of factors, including changes in government policies, political instability, and upcoming elections. Some specific ways that political uncertainty can affect the Indian stock market include policy changes. If there is a change in government policies or regulatory environment, it can create uncertainty for companies and investors. For example, if the government changes policies related to taxes or foreign investment, it can affect the profitability and growth prospects of companies, leading to a decrease in demand for their stocks. Political instability. Political instability, such as protests or civil unrest, can create a negative sentiment among investors and lead to a decrease in demand for stocks. Upcoming elections. The uncertainty surrounding upcoming elections can also impact the stock market. Investors may be hesitant to make investments in the months leading up to an election, as they may be uncertain about the outcome and its potential impact on the economy and specific industries. It's important to note that political uncertainty can be a major concern for investors, as it can create unpredictability and instability in the stock market. However, it's also important to note that political uncertainty is not the only factor that affects the stock market, and it's often just one of the many factors that influence the market's performance. Global factors can also play a role in the performance of the Indian stock market. Some specific global factors that may be contributing to the current market decline include global recession or financial crisis. When economies around the world are struggling, it can lead to a decrease in demand for stocks globally, including in India. A recession or financial crisis can also lead to decreased trade and investment, which can negatively impact the Indian economy and stock market. Interest rate changes. Central banks around the world, including the US Federal Reserve, can influence global interest rates. If interest rates in other countries are increasing, it can make investing in those countries more attractive, leading to a decrease in demand for Indian stocks. Global political and economic uncertainty. Events such as the ongoing trade tensions between major economies or the rise of protectionism can create uncertainty in the global economy, leading to a decrease in demand for stocks globally. Global pandemics. A global pandemic such as COVID-19 has caused a huge economic disruption. This has created a negative sentiment among investors, which in turn can impact the stock market. Commodity prices. The prices of commodities such as oil and metals can also affect the Indian stock market. For example, if oil prices are high, it can increase the cost of production for Indian companies, which can negatively impact their profits and stock prices. It's important to note that the Indian stock market is interconnected with the global economy and global markets, and events and trends in other parts of the world can have a significant impact on the Indian market. Sectoral specific issues refer to the performance of specific industries or sectors within the Indian stock market. These issues can have a significant impact on the overall market and can contribute to a decline in stock prices. Some specific sectorial specific issues that may be contributing to the current market decline include technology sector. If the technology sector is underperforming, it can drag down the overall market. For example, if companies in the technology sector are not meeting earnings expectations, or if there is a slowdown in demand for their products or services, their stock prices can decrease, which can negatively impact the overall market. Banking sector. India has been facing a banking crisis. Many of the public sector banks are facing huge non-performing assets, and this has created a negative sentiment among investors and could be one of the reasons for the stock market decline. Real estate sector. The real estate sector has been facing a slowdown. The demand for real estate has decreased, and this has affected the companies in the sector and their stock prices. Auto sector. The auto sector has been facing a slowdown. The demand for auto has decreased, and this has affected the companies in the sector and their stock prices. Small and mid-cap stocks. Small and mid-cap stocks are considered as more risky than large-cap stocks. When the market is going down, these stocks are affected more than the large-cap stocks. It's important to note that the performance of individual sectors within the Indian stock market can vary and can be influenced by a variety of factors such as changes in consumer demand, technological advancements, and economic conditions. When one or more sectors are underperforming, it can drag down the overall market.